Canadian bank earnings continued to beat estimates today, with BMO and National Bank of Canada both reporting a rise in first quarter profits earlier today. So for more on their results and his outlook for this sector, joining us now is Bruce Campbell, founder and portfolio manager at StoneCastle Investment Management. It's good to have you join us. Thanks so much.
Yeah, thank you for having me on today.
So I guess what's your takeaway first with some of the Canadian banks that we saw reporting today?
I mean, the standout is obviously National Bank with the acquisition of Canadian Western Bank. That seems to be going a little faster than they had anticipated, and it's working out a little bit better. I mean, that seems to be the winner on the day as far as performance goes. And then even Bank of Montreal. I mean, you saw solid numbers out of there. Probably the U.S. was a little bit slower, but we kind of also anticipated that would be the case, right?
Yeah, and we saw the similar results earlier in the week. We're still expecting a couple later this week. So TD, Royal, and CIBC all reporting tomorrow. Do you expect kind of similar strength with these banks as well?
I would think that you would see similar. Yeah, I mean, the two areas that have really stood out as far as growth goes is the personal banking side and then wealth management. And both those trends probably continue. We've seen a fair bit of stability on the personal banking side. The net interest margins have been good. And then on the wealth management side, with markets being strong, you've seen, strong wealth management. And then also on the capital market side, you've seen a pickup in financing activity and some of the capital markets activities. So those areas have been strong as well.
Where do you think future earnings growth could come from the Canada's major banks if we look ahead to maybe the rest of 2026?
Yeah, I mean, what I would probably anticipate is that you continue to see the bank earnings from the personal side continue to be fairly stable, right? Unless we run into some type of recession, which doesn't seem to be in the cards right now, then those should be fairly stable. And then wealth management continues to tick along and grow, and there's more money always being accumulated by these companies. And what you probably want to watch for is additional acquisitions that some of these banks could make on the wealth management side of things. And then the capital markets, if we continue to see strong markets, there's going to be more IPO activity, more secondary offerings, and that really drives the capital markets, which can be, more lumpy, but, it seems like we've gone through the bottom and are now headed back up.
Mm-hmm. You mentioned recession, how we're probably not headed that direction, but there's probably, I'm sure, some other challenges that these financial institutions could be facing in the year ahead, maybe even rate cut decisions. Like, what's your outlook for the Fed and the Bank of Canada in terms of decisions, and how would that impact the banks?
Yeah, I mean, if you continue to watch what the market's anticipating from looking at those interest rate forecasts as far as where they're going to get cut, there's probably a couple of cuts left in both Canada and the U.S. this year, or what is the markets kind of has priced in. I mean, that certainly does have an impact on the bank earnings for sure, but it also has an impact on the economy. So while the personal banking might not accelerate at the same pace, the wealth management and the capital markets could pick up the slack that is lost in the personal banking side of things if we see rate cuts.
And obviously, as you mentioned, like the Canadian economy, a little sluggish to start the year. The housing situation in Canada, quite sluggish still. If that continues for the rest of the year, can you just kind of expand on how that could impact Canada's bigger banks?
I mean, the one issue that has kind of been on everyone's mind for the last probably 3 years now is the refinancings that are going to be happening. We saw so many people buy homes or refinance homes back in, just coming out of COVID or during COVID, and those now are coming due to be refinanced. And I mean, that's always a risk because of the fact that interest rates now are higher than where they were. And so there is certainly loan loss provisions that have been built in, and there's concern there. So far, that's been handled quite well. Certainly anything that's been done to date has been fine. And it just seems that, perhaps the consumer is just tightening their belt in some way to make sure that they can meet those increased payments from a mortgage.
Yeah, for sure. Are there any other headwinds, but also like key drivers that you see for the banks for the rest of this year that we haven't touched on yet?
I mean, clearly the biggest one has to be the economy and recession. And right now in the Canadian economy, things are fairly good. We're seeing a lot of our resource companies do well. coming up in June when when we start to see the negotiations with the U.S. and Mexico, that could potentially have an impact on the manufacturing sector. But of course, we don't know where that's going to land right now, and we also don't know how it's going to shake out. But it could be kind of third quarter or fourth quarter news for the banks.
Okay, we will leave it there. That's all the time we have. Bruce Campbell, founder and portfolio manager at StoneCastle Investment Management. Appreciate your time today. Thanks for your insight.